Today, I am going to show the mistake why most traders lose money. Most traders don't lose because they're bad. They lose because they try to predict instead of react. What I want to say is, look here. A lot of traders will see this because this is a buy-side liquidity sweep. Now they will see this low and one more low resting below, and they'll start looking for bearish opportunities. And there is nothing wrong with that. But the issue is they tie themselves to their ideas. They have an idea of getting short, and they get so blind that they ignore everything happening in the current price action and force their bias. This becomes confirmation bias, and later they realize there wasn't any confirmation in price, and they took a loss for nothing. Now notice, if I go on the lower time frame, we have a low here, which is our sell-side liquidity. Now that's right, we want to go bearish. But look how price closed back inside the range instead of displacing the low. Look at how the price displaced above this high. Now a lot of traders will see this high break as a liquidity sweep just because they want to go short because of their ideas. Now think about this. If you don't stick to your ideas, and you see here that price swept sell-side liquidity, but instead of displacing to the downside, it displaced to the upside. The low stayed protected, and price moved up without taking the low. It also created a fair value gap, which means price is clearly telling you it doesn't want to go lower. If you entered on this gap and targeted the next liquidity level to the upside, instead of blindly shorting on the lower time frame, you could have gotten a good opportunity and target. Look how big this move was. Now think about it yourself. Instead of predicting and forcing your ideas on the market, if you get in sync with it, you'll actually lose less. Now what happens with these traders is that they keep trying to get short throughout this entire range. And when the real confirmation comes, like when we have a change in the state of delivery, they have taken so many losses that they don't have any confidence left to trade. Now we have the real confirmation here. We have a bearish change in the state of delivery. We enter here, place our stop at the high, and target the sell-side liquidity. We entered here because we reacted to what price did. There wasn't any break of the low before, that's why we entered here. Look, we entered here, and see how beautifully price moves towards the downside, ending up giving us the target. Now think about it this way. These traders took so many losses, trying to get short in this range on the left, while price was continuously telling them to go upside, and now when the real move happened here, they didn't have the confidence required to trade, or in worst case, some traders may have flipped their bias. Then, when the real move comes, these traders start trying to go long at all of these levels right here, while price is clearly moving towards the downside. Now in this, we have a sell-side liquidity sweep. Now what happens is, as soon as the liquidity gets swept, a lot of traders get impatient and start looking for confirmations. And then, even if they get a little bit of confirmation, they enter directly, place their targets, and start looking for confluences that can support their ideas. In the end, nothing happens, and these traders get stopped out by the market. Now, why does this happen? First, look at all of this structure right here. Let's try to observe what's happening here. We had 3 highs here. Let's mark all of these highs, and then I'll tell you the exact reason many traders lose money even after getting confirmations. Here, price sweeps our sell-side liquidity once again. Keep noticing the range we have to our left. Now let's slow down a bit and look at this carefully. Look here. We have a market structure shift to the upside because price broke above the high and the candle closed outside this high. Now look at the highs we had before. Did any of these highs have a candle close outside? No. None of these 3 highs had a single displacement candle closing outside those highs. But we have it right here. So we enter long, place our stop just below the previous low, and target the buy-side liquidity. Now price continuously displaces to the upside and ends up giving us our target. Now why did this happen? Why didn't we lose this trade? Because as traders, we usually tie ourselves to an idea or bias and forget to read how price is reacting to certain levels. Look how these 2 highs had huge rejection and the candles closed back inside the range, right? So when our bias becomes bullish, we look for the same thing. We had the same rejection at the low. That's why we entered. Look how price was displacing the lows and rejecting from the highs here. Now when price rejected from the low and displaced the high here, That was our signature in price to go upside instead of breaking the low and going downside. These losing traders don't try to read what price is doing. That's why they keep losing. So thanks for watching. If this made sense to you and helped you see the market a little clearer, make sure you join my Telegram and Discord server. That's where I share daily market overviews, clean educational PDFs, and real-time insights so you can understand what price is actually doing instead of guessing. You'll also be part of a serious community where traders focus on learning, not gambling. And if you really want to speed up your progress and avoid the mistakes most traders keep repeating, you can check out the one-to-one mentorship link in the description. I'll help you build clarity, confidence, and discipline so you can react to the market instead of fighting it. Trade smart, stay patient, and I'll see you inside.